Hello, everyone. I'm Patrick Fross with Fross and Fross Wealth Management, and welcome to our weekly market update video for the week of January 30th, 2023. Remember, nothing here is to be considered a recommendation, and please read the disclosures on the email to which this video link was attached, or if you're watching on social media, please go to frossandfross.com. Well, the latest numbers from the Bureau of Economic Analysis showed that the U.S. economy grew by 2.9% in the fourth quarter of last year and 2.1% for 2022. So does this mean that the Fed has somehow engineered a soft landing and avoided a recession? Well, the opinion of our investment committee is an emphatic no. Because the report shows what's going on in the rearview mirror, not what's coming up on the road ahead. Economic growth is definitely slowing down. For example, business investment grew at only 1.4% in the fourth quarter, but that was almost entirely inventory growth. And that growth in inventories is the result of businesses being unable to sell off existing inventories at current prices. Eventually, they'll end up liquidating the inventory at discounts, which will mean lower profits and a further drag on future growth. Another positive contributor to the GDP number was net exports, which is simply exports minus imports. But the gain here resulted from a slowdown in international trade, hardly a sign of a strengthening economy. So even though 2.9% Q4 GDP sounds really good, it's actually very misleading. If you've ever driven a car that ran out of gas, you may have noticed that the engine would rev up right before it stalls out. And that seems to be what we're witnessing with the economy. We've got an engine running on fumes about to stop. We expect a recession to arrive sometime in 2023. However, most likely it will not be nearly as severe as the Great Recession of 2008. And ironically, it may be just what we need to bring inflation down to an acceptable level. After that, the Fed should start swinging the pendulum the other direction by cutting rates, and the result should be a surging stock market. And when that surge happens, it's usually very fast and easy to miss if you're sitting all in cash. Remember, it's not timing the market that brings success, it's time in the market. Well, I'd like to remind everyone that our annual State of the Markets presentation will be held at the Everglades Recreation Center on Tuesday, February 7th at 2:30 p.m. Invitations for this highly researched and informative event went out to your email inbox on the 17th. So please click on that email to register, or if you'd rather register by telephone, you can call 352-623-2823. That's 352-623-2823 to register on the phone. Well, that's it for this week's economic and market update video. This is Patrick Fross with Fross and Fross Wealth Management, and on behalf of all our advisors and staff, we would like to express our appreciation for the trust that you've placed in us. And we look forward to seeing as many of you as possible on February 17th. Have a great week.